Hello, my name is Dr. Paul Cottrell, and I am recording this on 5/17/2026 at 9:26 a.m. The markets will be opening up later tonight, and I want to give you an update on what is going on in the financial markets. In addition, I'm going to go over two videos, short clips, talking about the oil market and the potential threats to the economy. But before I do, please take a look at my website and help support the work that I do. All these videos I do are for free. You can donate on the homepage of my website. You can donate through Stripe, PayPal, or buy me a coffee. You can also take a look at my broadcasts. I have radio broadcasts, live and paper. Radio broadcasts on the website are the archive of my audio podcasts. Live are my live streams that I do on a weekly basis, throughout the week, I should say. And paper is generated news, a new article I just generated today about the Ebola outbreak. Now, the I also have classes that you can sign up for pulmonology and immunology. You can sign up for those under the store classes. And you can sign up for the pulmonology or immunology class for only $25. You get a lot of PDFs, lots of videos. You get a unique password. You log in under classes, and you can take a look at that material at your leisure. I also have ebooks. So talking about finance, genomics, artificial intelligence, and endocrinology, and great supplements such as structural nanosilver toothpaste. They'll whiten your teeth, freshen your breath, and help reduce inflammation at the gum line. Max 35 and Max 14 will help to boost up that innate immune system. Take a teaspoon a day every day. Structural nanosilver, I have two types. You can get it in the tube version or the quick dispenser version called Renew. They're at different price points. And you use them the same way. You apply it on your skin daily for daily skincare. You can put it on a wound, and it'll help to heal the wound quicker. And if you are not feeling well because of the cold season, or you're around someone that's not feeling well because of the cold season, you can put it on your hands, around your eyes, around your ears, around your nose, around your mouth, lightly coat your nostrils. It'll stay active for 5.5 hours. I also have in stock the peppermint soap. This is a structural nanosilver soap to help to neutralize. It's a great soap for daily skincare. I have the cherry structural nanosilver drops, the Manuka honey lozenges, and the orange splash lozenges. The drops and the lozenges are great for the allergy season or the cold season. The moment you have that throat irritation, take them right away. They'll help to neutralize and mitigate any further problem. In addition, because we're in the spring season and people are cleaning their garage or their basement or their home, it's important that you take them right away just to mitigate any problems from the dust that you are starting to disperse around you when you're cleaning. Probiotics, I have two types. I have the veggie cap version, which is shown on the screen. I also have a powdered version that I'll show later. Cleanse, used the same way as Max 35 or Max 14. They're all at different price points, but it'll help to boost up your innate immune system. I have C60. You can get it in a 2-ounce, a 4-ounce, or an 8-ounce configuration. C60 is a very strong antioxidant. Take a teaspoon a day, it'll soak up free radicals. And by soaking up free radicals regularly, you're slowing down the aging process. You're improving your energy levels because the health of your mitochondria will improve, and you'll be building up higher concentrations of ATP. In addition, by soaking up free radicals at the vascular level, you're reducing plaque formation. And C60 helps with your basal layer for your skin. by improving your basal layer, your skin will actually improve. Stacks really well with resveratrol. You can get it in extra virgin olive oil, avocado oil, and MCT coconut oil. You can get also from my store vitamin D3. Vitamin D3 is super important to build denser bone. It also helps with cardiovascular health, and it helps to get cells to go into apoptosis if they're infected. Vitamin C and magnesium helps with the skin, boosts up the immune system, and helps with brain function. Omega-3 helps with the cardiovascular health. Ashwagandha root helps to control your cortisol levels and your blood glucose levels. Goodnight formula has tryptophan, melatonin, GABA, and passion flower to allow you to get into those deep cycles of sleep and REM sleep, so you are consolidating memory and detoxifying your central nervous system. This probiotic is the powdered version of the probiotics. With a good probiotic, you're helping your gut biome, reducing inflammation, boosting up your immune system, and also helping with your skin. A lot of people don't realize that with a good gut biome, you also will sleep better. Resveratrol will help with youthful gene expression, stacks really well with the C60. Vitamin B complex will help to boost up energy levels, help with cellular metabolism, and protect neurons. Turmeric will soak up those free radicals and bring down inflammation. Magnesium and zinc will help with brain function and boost up your immune system. Lignans helps with your immune system and your endocrine system, soaks up free radicals and brings down inflammation. Lignans, turmeric, and ashwagandha are a very powerful stack to be able to help with your cardiovascular health, brain function, and boost up your immune system. Collagen is great to help to improve your skin, your nails, your hair, your bone density, your joint health, and your musculature. Digestive enzyme complex will help to reduce the load on your pancreas. They'll help you to digest proteins, carbohydrates, and lipids. Clarity factor is a very powerful neurostack to allow you to get rid of that brain fog, and you'll be able to concentrate better. And by taking clarity factor on a regular basis, you're going to improve the neural network. You'll be building other neural networks and strengthening the neural networks you have. And therefore, you're going to be thinking better and you're going to have better memory. Your cognition will improve by taking clarity factor. Olive leaf extract is dual purpose. It's going to help with your immune system and your cardiovascular system. It brings down inflammation and helps to control the lipid profile. Zeolite is a great way to detoxify your body. You take 3 small drops underneath your tongue, drink filtered water, do this daily. And by doing this, you're removing heavy metals, toxins, and chemicals. It binds to those toxins within about 6 hours to 8 hours, you'll be able to urinate them out. Myotrol will help to build muscle and maintain muscle and also improve the health of your mitochondria so you can maintain that muscle. Myotrol has polyphenols, flavonoids, and lignans to help with the gene expression to build muscle. This is very important for individuals that are 40 years of age or older, but you would also benefit from Myotrol if you're an athlete, younger or older. Boomer Boost has a very comprehensive compound profile shown on the screen here. You should be taking this every day, and this will help to improve your brain function, your cardiovascular health, musculature, improve your energy levels, and slow down the aging process, bring down inflammation. It's a great way to get healthy. So please get the Boomer Boost. Gladiator barley and heirloom barley, they allow you to detoxify your body regularly, soak up free radicals, and bring down inflammation. And by doing that, you're improving your immune system and your endocrine system and brain function. You're also helping with your joint health by bringing down that inflammation. But by doing this on a regular basis, you're slowing down the aging process. Now, the difference between gladiator barley and heirloom barley is that gladiator barley has one added benefit, and that is they'll help you to build muscle. Collagen is a great supplement to take to help rebuild your joints. Now, if you have had a sports injury or just are getting older and your joints aren't working as well, there's pain, taking collagen will help to remodel the joint. Now, how it works is that the collagen, uh, for some reason, there it is. The collagen, what it'll do is it'll help to recruit and use the collagen type 2 to remodel the cartilage, but also glucosamine to help remodel the cartilage. And it'll use ACAN and chondroitin to help to cushion the joint. In addition, it'll help to manage the pain channel gatekeeper NAV 1.7 and inhibit the erosion of the joint by inhibiting MMP3 and MMP13 enzymes and reduce inflammation by blocking the EP4 receptor. So it's a great supplement to take if you want to remodel your joints. So if you have arthritis or a sports injury, please go to my store and get the collagen and stack it with the collagen. So a great combo here is the collagen and the collagen. Now, super strong relief relieves pain. If you have muscle pain, joint pain, bruising, tension headache, by applying this topically, you will get relief from your pain within about 90 seconds. It's a great product. So please go to my store and get the super strong relief. Now, I also have anti-aging curated boxes. I have some that are sold out, but many are still available. And they are boxes that have been curated to allow you to stack for a particular purpose. Like, for example, the longevity boost box. This box, you get the Boomer Boost and your choice of Gladiator or Heirloom Barley. Now, if you were wanting to focus on, let's say, the immune system, this gives you the lignans, the turmeric, and the olive leaf extract. And if you wanted to go with, let's say, anti-aging deluxe box, you get the Max 35, the C60, the vitamin D3, the vitamin C and magnesium, the toothpaste, the probiotic, and resveratrol, and your choice of C60, avocado, MCT, coconut oil, or extra virgin olive oil. So this is a great way to stack for your anti-aging protocol. Or you can purchase the products separately. It's up to you. But those are the different products that I offer on my store. Please help support the work that I do by going to thestudio-reykjavik.com and get the great products that I offer. All these videos I do are for free. And if you please would like to help support the work, also share the links. And by sharing the links and asking your social media to follow me, I'll be able to reach a larger audience to help to improve their health and wellness. I greatly appreciate it. So with that, we're going to go over the actual market and then the videos. So I want to switch over to the updates on the market. And then we'll go to the two videos that will talk about the economy and how oil is affecting the economy. SPY is the ETF for the S&P 500. And 2 trading sessions ago, we had an all-time high of 749, almost 750 for SPY, which equates to close to 7,500 on the S&P 500. On Friday, it did go down and it was trading at 739. I have a year-end target of 7,400 to 7,800. And by June, I probably will up that target to topping at about 8,000 for the S&P 500. That would equate to 800 for SPY. Okay. So I still think that it's going to continue to go up. And this big gap up here that took place in April is going to march up. Now, there may be some corrections and some, undulations, but I think overall throughout the year, we're going to be closer to 800 on SPY and 8,000 on the S&P 500. All right, with that, let's talk about what the near-term resistance level is. Right now, the near-term resistance level is 750. The support level is 720. And you have a fib sequence at the 23% retracement at 685, and that is a strong support level. So if there was a market sell-off, there is a large support, a very strong support level at 685. Now, if 685 broke, then there is a very strong support level, another strong support level at the 38% retracement at 646. But in the near term, 750 resistance level, not that strong of a resistance level, and a support level at 720. I think the market will continue to drift upward. Now, oil. As you can see, it's gone up and then down and then up and then, right? But several weeks ago, a few weeks ago, I should say, I thought that maybe a head and shoulder pattern was starting to develop. And I said that around this point here. And that head and shoulder pattern broke. It didn't come back down. I thought it was going to start coming down at this point here, but it went back up. And now it's a new type of pattern. And what that pattern is that it's a harmonic. It's a harmonic that's starting to dissipate. So there was a bunch of energy in the trading momentum, right? That spiked up to about the highest level was 119. And then it started to come back down. So we had this energy increase in the trading or momentum. And then it started to dissipate and then came back up and then it came down and it's coming. So you can see this is starting to dissipate. It's like a harmonic dissipation. All right. And so if you just take the average of this right up here, you're looking at trading at around 100, just below 100. So it's starting to stabilize. You're starting to see a stabilization at the $100 range, maybe 98 range, somewhere in there. Now, if we zoom in here, we still have a trading range of approximately 84, around 85 to about 104. There's still a trading range that is still possible here. So 95 to about 104 is the trading range. But there is a harmonic dissipation that's starting to develop in this time series. Now, what possibly could happen? Well, if we go and do additional operations against Iran, which is very possible in the near term, then we'll probably see a spike of oil above 104 and then come back down into that trading range. If we see de-escalation and the opening of the Strait of Hormuz, I believe that we're gonna go below the 50% retracement and be below $87 a barrel. Now, when that happens, who knows? Who knows? I'm a little surprised that Trump has taken this long to solving the problem with the Strait of Hormuz. Now, let's go to natural gas. Natural gas has a little bit different dynamic, and I have two curves on this chart. One is the natural gas futures, which closed on Friday at 2.961. And I also have the shorting ETF for natural gas, which is cold spelled with a K. And that traded on Friday, closed at 24.49. So if natural gas goes down, cold goes up. When natural gas goes up, cold goes down. And you can see here that as natural gas was going down, cold was going up. But as natural gas bottomed out at 2.495, which is approximately 2.5, it started to come back up. And when you start seeing that, you also start seeing cold starting to drop. All right, so we're going into the summer season, and typically natural gas does go down in the summer. Now, there's an added wrinkle to this story compared to historical averages, and that is the use of AI and energy consumption. A lot of electricity in the United States is run by natural gas. So the use of natural gas for AI is going to increase over time. But there's an awful lot of natural gas in the United States. But there's also the need to export natural gas through LNG to Asia. And because of that, there will be less storage of natural gas in the United States. So over time, the natural gas futures is going to start becoming elevated, even in the summer, and above the historical average. I mean, sometimes natural gas would be trading at 2 or less than 2. And this year, it's trading closer to 3. So we need to think about this because of the AI revolution, if you want to call it that. So what do I think that will happen in the near term, and what's the resistance levels? Let's talk about natural gas first. I think natural gas resistance level in the near term is 3. And I think that the support level for natural gas in the near term for this week is probably around 2.7, 2.6. So 3 for resistance level, 2.6 for support level. Now, that means that we're getting close to that resistance level, and it probably will bounce off of the 3 and come back down a little bit. So I suspect in the near term that natural gas will go down and cold will go up as it's bouncing off that 3 and getting closer to the 2.6 range. So we can see, it's very possible to see natural gas go from 24.49 to maybe around 25.50 this week. Now, if natural gas breaks 3, then I think the next resistance level is around 3.2. And then the support level will then go up to about 2.8, 2.7. And if natural gas does break 3 and go to 3.2, then we're looking at possibly a 23 handle for cold. Now let's talk about the belly of the curve. Now the belly of the curve is the 7 to 10-year treasury. This is a TYD, which is a 3 times ETF leverage for the bond market. So if the bond market price goes up, then this ETF will go up. Now, what has happened in the last few trading sessions is that the yield for bonds have been going up and the prices have been going down, and therefore this ETF has been going down. Now let me read off what the yields are Um, I have another chart here, right here. The 30-year yield was trading at 5.02 and the 10-year is trading at 4.47. That's pretty high. It should be at 4 or below 4 right now. So because of this movement in the bond market, and part of the reason is Strait of Hormuz isn't solved, energy concerns and inflation concerns are going up, fiscal spending issues in the United States, and the Federal Reserve doesn't look like they're going to lower rates anytime soon. And because of that, bonds have been ticking above where they should be. Again, I think it should be closer to 4, maybe just below 4. And the last time we saw that was the beginning of March, the end of February. And the 10-year has been ticking upward slowly. So this is the reason why you're seeing TYD starting to drop even lower. And it broke its support level at 23.41. And the reason for that is the 10-year broke the 4.4 mark. So it's getting closer to 4.5. Now, that means what's the next support level? Because it broke the 23.41, the next support level is going to be 23. And then after that, you're looking at 22.36 was the bottoming of the beginning of 2025 at 22.37. So you have a somewhat of a support level because it's a round number at 23 short term, and you have another support level at 22.36, which goes all the way back to the beginning of 2025. Now, if yields start to go down, then bonds are going to start to go up in price. This will go up and then break the 23 resistance level, 23.41 resistance level, and then get closer to 24. If the yield drops below 4.4 and gets closer to 4.2, then what you'll see is this TYD ETF get closer to 24. All right, this chart here, let me go into a little bit more detail. It does coincide with this chart, but this breaks it apart. This is the 30-year curve. This is the 10-year curve yield. And this is the Federal Reserve rate. Now, this curve here on the bottom is the spread. And if you notice, the spread has been going down, but that's because the 10-year yield has been going up faster than the actual 30-year. So this gap between the 30 and the 10 is slowly shrinking. And that spread, 30-year minus the 10-year, is at 0.55. Now, what is interesting is that once it gets close to the 0.55 mark or the 0.5 spread, it usually starts to creep up. Well, that's usually because then you have for different reasons, but it's like in this case here, you could see the spread started going up after it bottomed at or just below 0.55 for the spread. But if we go up here, you can see that at this point in time, you had you could see that the 10-year went up and the 30-year was going down. So you can see that there was a little bit of movement on the back of the curve in the 30-year. So it depends on which bond is moving faster, the 30-year bond or treasury, I should say, or the 10-year. but that spread is starting to get closer to, usually it doesn't stay at that level for very long. Now, it did happen in 2025 when everything was starting to drop and the 10-year was probably dropping slower than the 30. And so the spread was pretty low, below 0.5 for a while, for a few months. And that spread then started ticking up in August. And it looked like the 30-year was moving faster than the 10-year. So there's definitely this change in movement between the 30 and the 10. So that's the reason why I show the spread. But recent trading, there's been more movement in the 10. More movement in the 10. And I think this is related to potentially inflation because of oil, the war in Iraq, the signaling from the Federal Reserve that they're probably not going to lower rates, and that's moving the 10-year more than the 30-year. Now, this chart here is the VIX, and this is the volatility index for the S&P 500. When you have a spike, that means there's a lot of stress in the market and equities start to sell off. And you have noticed that we had problems at the very beginning of the year. There was stress starting to build up, and then it started to come back down. And normally, you'll see these spikes happen every, 2 months, 2.5 months, there's a big spike, right? We are below, when you're below 19, you're in a good zone. If you're at 15, that's perfect. We're below 20, we're below 19, we're at 1843. And because it's been below 20 for a while, you can then look at what was going on with SPY, which is an ETF for the S&P 500, and you can see that there is a march upward. This kind of piece, some people call it the wall of worry, some people call it melting up. So as long as the VIX index stays below 19, then you're going to continue to see this moving, the S&P 500 moving upward and the VIX staying at this level. But you're going to have a spike that's going to happen. All right. And let's just think about this for a second. Like I said, you normally have a spike every 2.5 months. Something happens. Now, sometimes it's a spike, and then the next spike is higher than the previous spike, and sometimes you have a spike that is declining from spike to spike, from peak to peak. All right. So let's take a look at, we're going to say April was the last big event, which was above 30 or so, right? Just below 30. Now, if we use April as our starting point, or just before April, the end of March. So you have April's 1 month, May is another month. So you should have a spike happening soon here in May. So we should, at the end of the month, or maybe even this week, see the VIX spike above 20. I suspect it won't be up to 30. I suspect that it'll be like 22 or so. You're going to have a little bit of a sell-off in SPY, a little bit, and it'll probably go down to about 720, maybe just like 725, and then it'll march back up again as the VIX starts to go back down. So I suspect this month we're going to see a spike above 20, but not to 30. It's probably going to be at about 22, maybe a little bit below 25, and then come back down really quick. But I suspect that there's going to be some sort of spike that happens. So if you take a look at from that spike that potentially will happen in May to this spike here that happened at the end of March, it's declining. So you had a spike, another spike that's less than the previous one, and then there's going to be another one this month that's going to be showing even less. And when that happens, it'll die down and start trading at around the 17 range for VIX. And when that happens, you are going to see the S&P 500 and SPY go to all-time highs, and most likely on the SPY ETF, we're probably going to see breaking 760 when that spike happens and then falls back down. When it happens, there's going to be a sell-off. It's going to get to about 725 on SPY, and it'll come back down, and then SPY will start marching up past 750, closer to 760 after a few trading sessions. But there's a spike that's going to be coming up, I suspect, this week or next week for the VIX. All right, that is a summary of the market. Now, what I want to do is I want to play these videos for you. First, we're gonna go over Bloomberg's video. And then we'll go over, I think, a CSIS video, and maybe that it is, I'm not sure. Well, all right. This video is only 6 minutes long. This is talking about the Treasury market and the rise in oil prices. So keep in mind what I was mentioning, that yields on the 10-year are much higher than they should be.
So I'm really worried that what we're seeing in the equity market is going to accelerate. We haven't seen a breakout of yields to these levels in quite some time. And that 5% level for the long bond, that matters, and it has in the past for equities. So I'm keeping an eye on what happens in the stock market today, frankly.
What is pushing rates higher? Again, you mentioned the 30-year at 5.10%. That really gets people's attention. The 10-year at 4.55, that breaks out a little bit. What's going on there?
Well, I think we're still trading the conflict in the Middle East. We're still worried about the energy complex. We're coming off of a series of inflation prints that have demonstrated that we're already starting to see some pass through to core. There were a few technical adjustments from the BLS that propped up the core numbers, so we weren't particularly surprised or worried, but the market clearly is, and we just went through the 10 and 30-year auctions, and so they're still in the process of being redistributed. And as we have seen in the run-up to pretty much every weekend, we're worried about the event risk of those 2 days in the Middle East, because frankly, anything can happen.
You don't want to hold a risk position over the weekend? Exactly. I mean, this is telling me, I'm an equity guy, so, but, you know, I try to stay away from the bond market. But when I see rates move higher like this, that just shows me angst in the marketplace. And I guess the angst is more persistent, more stickier inflation. Is that what we're seeing?
I think that's part of it. There's also a fiscal concern.
Okay.
So the inflation argument is fed into by the notion that the labor market remains on solid footing. We had a higher than expected, but still low initial jobless claims number. Inflation is moving along fine, but not to levels that are troubling yet. If the unemployment rate had been materially higher, or we hadn't had strong payrolls, I think we'd be in a much different macro environment.
Ian Lincoln with his BMO Capital Markets. He's taken every trophy there is in fixed income. It's dense and extremely red on the morning hours. Get that from the Bank of Montreal BMO Capital Markets, BMO Capital Markets. So I look at the real yield. There's a number of ways to look at this. I've seen a leap here from a 190 out to a 2.04. I got some history at 2.11. What are the ramifications if the 10-year real yield breaks out the new territory?
Well, I think that it depends on how that occurs. If it occurs with a compression of break-evens because inflation expectations have moderated, then I think that the real economy can absorb that in it.
It's a more buoyant economy, productivity, innovation, and that.
But if it's a flip side and you see widening of break-evens and higher real rates, that is a vote of non-confidence of treasuries as an asset class.
Nicely explained. Now, you're a grizzled pro at this. He's got 3 Bloombergs. You should see it.
I know.
I mean, Trois Riviere darkens when he tunes in his Bloomberg. Okay, so you've got a bond market complexity, and the answer is there have to be trip points. What's the Ian Lingen trip point? Is it the 5-year yield, the 10-year yield? Is it something esoteric?
Well, I think that the world looks at 10-year yields. I look at the 2-year yield as nothing more than reflection of near-term monetary policy expectations. And so anytime we're over 4% in this environment, that means that we're really contemplating rate hikes, which I don't think should be on the table. The long bond is more of an inflation story. And as we see, 5 handle on the 30-year is troubling for a lot of different asset classes. So I do think that the shape of the curve is going to be the story to follow this year.
Kevin Warsh can be stepping into the big chair at the Fed. It's going to be a little uncomfortable given some of the data we're seeing here. I mean, what do you think the messaging that's going to come out of this new Fed chair will be, should be? Because we're going to hear from him in the next few days, probably.
So he has been given a very difficult Fed to take over at the moment. Powell's still going to be in the room. He's coming in with 3 dissents against some of the language within the statement. It's interesting that the dissents were against the language and not against the move itself, as is typically the case. I suspect that he's going to have a very hard time building consensus over the summer to do anything outside of potentially scale back some of the forward guidance. Normally, I would say one of his objectives is to talk less in terms of being a Fed leader, and that could mean at some point reducing the SEPs or the dot plot, but I don't think anything's happening this summer.
I mentioned this earlier. Governor Myron on yesterday, Farrell grilled him. I thought John did a great job on the interview. And the distinction there is the inflation, not so much a one-off, but is it various supply side, even demand side shocks, or is there a fiscal persistency finally to it? How do you parse that when you look at the dynamics of the Ian Lingen bond market?
It does feel as though forward inflation expectations are moving higher for the average consumer and the average household. And that's what the Fed needs to worry about, because you can drill down into CPI and you can see that in April, core goods were effectively flat. And that's what everyone was worried about last year, the tariff pass-through. So we're beyond the tariff story, but now we're worried about airfares, energy prices flowing through to products at the end of the day. But that takes months to actually see.
Zero Hedge had a nice summary of a Goldman Sachs note where they triangle it out to a 4.60% 10-year yield being important. Do you have in your head that trip point on the 10-year where things change for the stock market?
I would say that we're right up against it. I would say 475, but right now we're just chopping around in a range that is reasonably well defined. And again, the level of conviction that is in this market is so low right now. When we talk to clients and make the rounds, people just don't know in fixed income space.
It takes 90 seconds for this NASA-engineered AC cool down your room. It's smaller than a toaster, cools any room in 90 seconds, and uses just a fraction of the energy of a regular.
All right, what we're going to do is now go over this DW news about the oil supply shock.
In this energy crisis is bigger than all 3 major energy crises put together in the history. Every country will be affected from that. There'll be a time lag, there'll be differences. No country is immune to that.
It was another stark warning from the head of the International Energy Agency, Fatih Birol, saying that the global energy crisis is big, it's here, and it's going to hit everyone. The Iran war and the blockade of the Strait of Hormuz have put a chokehold on global oil supplies, and many countries are trying to lessen the impact by releasing large parts of their strategic reserves. But analysts are warning the speed at which those reserves are being run down is pushing the oil market dangerously close to catastrophe. Research by the bank JP Morgan estimates that global stockpiles were around 8.4 billion barrels at the start of 2026. Now, that sounds like a lot, but only a tenth of that, around 800 million barrels, is actually usable. The rest is tied up in pipeline storage and other infrastructure and is needed there to keep the whole system running. Now, the supply stop from the Persian Gulf has seen that buffer of 800 million barrels used up at an alarming rate. By late April, it was down 35% to 520 million. Analysts warned that if the blockade continues, the world's oil industry could enter what they call operational stress by early June. And from there, the worst case scenarios look pretty dire. To tell us about them, I'm joined now by William Usher. He's a former executive at the CIA and expert in intelligence and international.
Now, it's important to remember this harmonic dissipation that I was talking about on the oil futures, where it seems as though it's stabilizing and reaching a new equilibrium at approximately $100 a barrel.
Security. He's currently a lecturer at the Bush School of Government and Public Service at Texas A&M University. William, welcome to DW. Now, in a recent article, you predicted June as the oil market's point of no return. June is around the corner. What do we have to brace for?
So I think we're in for a pretty severe shock in the price of oil globally. Your intro from the director of the International Energy Agency captured it exactly right, that efforts to mitigate the impact of the Iran war and the loss of about 20% of the global oil supplies coming through the Strait of Hormuz have probably about run their course. And coming in June, we'll see inventory starting to be depleting at a much more rapid rate, and that's going to translate into higher prices at the pump and higher prices that we'll be paying for everything from airline travel to food to everything that the global energy markets support.
Asia is most dependent on oil from the Persian Gulf. Of course, for them, this energy crisis you're describing, it's already here, isn't it?
Yeah, that's exactly right. Asia is the most affected. They got about 85% of their petroleum supplies through the Strait of Hormuz, and they have been suffering mightily since the beginning of the Iran war and Iran's move to close that strait. So we've seen impacts in several different countries imposing rationing, reducing use of electricity and air conditioning as the summer months approach. And this is going to be a severe problem very soon for places like Philippines, Pakistan, Bangladesh, et cetera. The other countries in the world are not immune. There have been many in the United States who were thinking that this would be the case because we produce a lot of our own energy these days. But as these oil tankers that left the Strait of Hormuz in March have arrived in the United States to discharge their loads, the impact will be felt here and in Europe.
You mentioned operational stress. Before we continue, could you describe what exactly that means?
Sure. What oil analysts mean by that is there's a certain amount of reserves and storage that the oil refineries and pipeline systems need to have on hand just to remain operational. Think of just keeping pressure in the pipe, keeping systems kind of operating at a bare minimum. When you cross that threshold, operational stress, you really need to start shutting down facilities. And shutting down oil facilities is a very tricky business, and restarting them, ramping them back up, can be a quite prolonged affair. So that's what they're talking about. And this could occur as early as next month in several locations.
So we're looking at an economic crisis, potentially just months or even weeks away. Is enough being done, in your opinion, to end this blockade, or are our leaders currently asleep at the wheel, just waiting for this to happen?
Well, I don't think that they're asleep at the wheel, but I think we're in a very complex game of chicken between the Trump administration and the regime in Tehran. They each have a stranglehold on the Strait of Hormuz, and each is waiting for the other side to blink. The calculus in Washington is that the Iranian regime somehow is going to cry uncle because their economy is suffering badly. Inflation is soaring. There's already widespread unemployment because they can't import through the Strait of Hormuz and they can't export their oil, which is their sole source of hard currency. That calculus, I fear, is misplaced because I think the Iranian regime is highly committed, very ideological, and they're autocrats, so they don't really care about the impact on their civilian population. Conversely, in Washington and democracies in the West, they do need to be responsive to public opinion, and public opinion is already pretty sour on the war here in the United States, and it's going to sour further as the price that people pay at the pump shoots beyond current levels of $4 or $5 a gallon to $6, $7 in the weeks ahead.
Yeah, the price of Brent crude was pushing $110 a barrel today. How high could it potentially go?
Well, that will depend on several factors, not the least of which whether a resolution is found to the conflict. The Trump administration is considering doing a tax holiday, alleviating federal taxes on gas prices. That will lower prices by about 18 cents a gallon. It will have some impact, but not really. They're also talking about banning exports of U.S. crude. Again, that will have a limited impact because much of what U.S. refineries are designed to process is crude from other parts of the world, including the Strait of Hormuz. So I think measures that governments can take will have a limited impact. It may soften the blow, but it won't prevent it. The only thing that will prevent it is reopening the strait.
Yeah. Let's put this into perspective for a second. We had the oil shock in the 70s, the COVID pandemic, the energy crisis stemming from the war in Ukraine, and we did get through somehow. How is this scenario different?
This scenario is fundamentally different for a couple of reasons. One, the amount of oil that's been taken off the market, about 20%, right, of global oil supplies, haven't been flowing, and it's barely a trickle. So the size of the impact is substantial. The other is, the war has done damage, obviously to Iran's facilities, but also in UAE, Oman, and Saudi Arabia. So bringing those facilities back online isn't going to be something that could be done with the snap of a finger once an agreement is reached, if one is reached. Now experts at financial houses and the IEA are saying, full return of the Strait of Hormuz flows won't exist until 2027. So it's prolonged from the get-go, and it's going to be quite severe, probably more severe than any energy crisis that we've seen in history.
How much of a threat to international security is this growing resource scarcity?
I would say it's quite severe. And, oil is what's got everyone's immediate attention, but the Strait of Hormuz also is a key source of fertilizer. And I think the food security impact will be what is perhaps felt earliest and most severe. Some experts estimate about 100 million people are going to become food insecure because they lack access to fertilizer from Persian Gulf states. So that's one. We've already talked about some of the energy rationing that's occurring in East Asia. Poorer parts of the world that will soon arrive in Europe and the United States, and that almost inevitably is going to lead to, at minimum, political distress. In some countries, it could lead to political unrest. So, some countries are really unable to bear up to a severe energy crunch, and they could see, violence and political instability on a scale that they weren't anticipating. And then lastly, over the longer term, this was a war of choice for the United States and for Israel. And a lot of the costs, at least early on, have been borne by our allies and partners around the world. And I think they're going to begin to question the reliability of the United States as a security partner as they reflect upon what's occurred over the last 2.5 months.
Wide-ranging consequences. Thank you so much for breaking them down for us. That was William Usher. Thanks for your time.
Well, that's the updates for the market and the potentiality of the oil shock that will even affect the United States and how it's affecting the bond market. So this goes back to what I've been saying for quite a while, that on 9/11/2026, there's going to be a series of bad events taking place throughout the 12 months starting on 9/11/2026. And it's not going to end until approximately the beginning of October of 2027. There's going to be food shortages around the world. That doesn't mean that people in the United States are going to starve, but there's going to be food insecurity. And in some countries, there's going to be starvation, especially in Africa. For the ones that have lived long enough, you'll remember the Ethiopian starvation that was taking place in the 80s, something like that. You also have a climate pattern, this El Nino, that is going to wreak havoc on food crops, food yields. Now, in addition to lack of fertilizer, because of the Strait of Hormuz being closed, this is another set of variables that are going in the wrong direction that will lead to crises in the world. Now, in terms of inflation, the oil continues to be elevated. It's going to bake in higher prices for everything that you purchase, not just gasoline. And it's not going to come back down. That even when oil does go back down, if inflation is baked into different products that you purchase on a regular basis, cans of soup, beef, or even clothing, everything will be elevated in price. And when oil does go down, it's not, those other items will not go down in price. They're going to stay elevated. The only way it's going to go down in price is if we actually have a deep recession, where companies need to shed inventory and they're selling at a bargain price or even at a loss. So we're seeing a series of variables that could cause major havoc when you look at it in its totality. If you look at any individual variable, it's not that big of a deal. But with complex systems, when you have a series of variables going in the wrong direction, there's an amplification effect. And there's an emergence of behavior that, in my estimation, is going to be very negative for the world. Now, I view this from a metaphysical point of view and also from a secular point of view. The metaphysical point of view is the world has not behaved accordingly since October 7th, 2023. There's too much infighting within different religions. Within the same religion, there's too much infighting within countries and the politics within the country and the international affairs of these countries. There's infighting with seculars, with individuals that are more religious. And there's a lot of hate that is going on in social media. We're all going to have a curse coming. And no matter how much you try to food prep, no matter if you try to find a cottage in the woods, it doesn't matter. This is going to harm everybody. Because this, even though it's a man-made issue, the curse that's coming is a punishment from on high. Now, the reason why I picked 9/11/2026 is because that is Rosh Hashanah that coincides with the Sabbath. And the shofar, or the ram's horn, cannot be blown on Rosh Hashanah when it's the Sabbath. The reason why it's so important is because it's the only time of the year where the silencing of Satan or Satan happens. So when you don't silence Satan, it allows for a curse to happen. And what is happening here is that we don't deserve a blessing because of what has been transpiring since the last time Rosh Hashanah has coincided with the Sabbath. We have not learned. The whole world has not learned. Look at the infighting within different podcasters, between Candace Owens and Ben Shapiro, between the Republican Party and the Democratic Party, between ultra-liberalism and conservatism, or let's say progressive nationalism, as Stephen Bannon calls it. The whole world is at fault. There's no one that's not going to be harmed by this curse. You can't hide. Because the more you hide, the more actually it's going to be worse for you. So you can see just by even if you don't believe in the metaphysicalness of what is happening, if you just put on a secular hat and look at these different variables that are happening in the world, you can easily extrapolate that negative externalities are going to happen in your life and in the lives of people around you. So I've been saying this for 2 years, that this was going to happen, and it's happening. Now you add in pathogens that are starting to spread, a hubris of a military industrial complex, and many scholars of history are saying that we're already in either in Cold War II or World War III. I suspect that we're in World War III already, but it's a slower walk because of the technology and because of the interconductivity of the world economy. But we're already in it. And I suspect that it started, I'd like to delineate it at the time of the invasion of Ukraine by Russia. And take a look at what happened with the summit between Trump and President Xi. I personally think that the United States, because of its lack of munitions, cannot fully defend Taiwan because we expended those munitions on Iran. Now, to go back to the metaphysical, there's infighting that's going on in Israel between the seculars and the religious. And there's also some sort of debate going on within the religious community about the red heifers or the paraduma, why they haven't been ritually slaughtered. They were able to be watched and slaughtered during COVID, but they didn't. Now, the last time that the Jews had red heifers to slaughter was 2,000 years ago. Now, if they don't become ritually slaughtered, but yet heaven wanted them to be slaughtered, then there's going to be a curse that comes down on Israel and these scholars for being afraid of doing the ritual slaughtering of Paraduma. So there's a lot of things that are happening that give credence to my thesis that there's a world curse coming. Now, maybe in some strange way, mankind can get their act together before September 11th, 2026, but I doubt it. So that's my take on what is going on. Please help support the work that I do by sharing the links, asking your social media to follow me. You can follow me on YouTube, Brighteon, Bitchute, and Rumble, and be a paid member to my Patreon or Substack channel, or you can donate on my website, the-studio-reykjavik.com. I do all these videos for free to give you my perspective and how you can try to navigate through these tumultuous times. And if you've been paying attention to me in terms of how to improve your health and wellness, then get the great products that I offer on my store. Make sure you use discount 5 and you get $5 off any order. All caps, discount, and the number 5. The products that I offer will help to slow down the aging process and help to boost up your immune system. And if I think what's happening does come to fruition, you're going to need to pay attention to me. Thank you for listening and have a nice day.